The end of 2023 is finally in the books, and it means that we can start to look at the data together as traders and investors of what's in store for 24. What are the biggest trends leading into the next year of markets? And more importantly, what sectors and areas should we be looking at? And why did the Russell 2000 sell off so much into the end of the year? Today we talk about the most important charts moving forward, and why it's very strange that central bank liquidity has dropped for 2 weeks straight. The last time we saw this was the end of 2021. So should we be concerned? Let's look at it together right now. Well, welcome back everyone to the Daily Show, where we talk about the macro lead indicators and the hottest charts together. Firstly, I'd just like to thank everybody for an amazing 2023. It's thanks to all of you out there that subscribed, liked, commented, and shared our videos that made our show one of the biggest in the world for daily content. And I really wish all of you a fantastic 2024 ahead. And I've already seen a few people sending through some amazing results for 2023. So remember, we come from an abundance mindset on this channel. There's always an opportunity in the markets, and never feel FOMO because there will be another opportunity. Speaking of FOMO, let's talk about Fear and Greed Index, because we are in extreme greed right now coming into 24, and it means that we need to be on top of quite a few things. I'd also like to give a shout out for the great feedback for the weekly free VIP newsletter. We'll be continuing that in 24, so make sure if you haven't already, subscribe to it in the comments down below, because that'll be an amazing thing, and we've got a lot of great stuff coming. Let's talk about 2024 and what happened to the Russell this week to start off with. Then we'll get to some big charts and some key levels that might blow your mind a little bit later on. But first up, investors say that rate cuts are the most tradable theme. This is from Goldman Sachs. And of course, it is the most tradable theme right now. Everybody says rate cut, and that means markets up, yeah? True, it will be, but remember, buy the rumor and sell the fact is one of the big things that tends to happen in markets around rate cuts. In fact, when the Fed actually starts to do the rate cuts, and maybe just a little bit before that, we might start to see the market get a little bit shaky. Look for volatility breakouts and some of the leads that we bring in on this channel for signs of that occurring. Remember, buy the rumor, sell the fact has been how it's traded in the past. We've also got some big sentiment surveys coming in. This is one from more sophisticated investors and let's call it like kind of extreme hobbyists. And what most people are thinking in 24 is that technology will continue to be the best area to be in. Do you agree with this? Let us know in the comments down below. Interestingly, that financials are also coming up with some strength. And I would say that's thanks to things like KRE, the regional banks becoming so strong. But notice all of the defensive nature of markets, they're not very popular. Utility is something that's come out just in recent days, starting to get a little bit more love though. Do you agree with any of these? What's your favorite sector? Let us know. Let's talk market performance before New Year's Day, and then of course after New Year's Day. So this is an interesting one. So before New Year's Day, sometimes it can get a little shaky. A lot of this has to do with tax loss harvesting and of course cooking the books, well, let's call it making the books really good, window dressing as they call it, so that we can make our results look good for 2023. That's what Wall Street's probably been doing over the last couple of days. And you can see it in Russell performance, which we'll talk about soon. These are the days after New Year's though, in terms of what happens. The day after New Year's Day is historically more bullish than bearish. So remember, the stats are usually quite good. Then 2 days after New Year's Day, actually kind of negative, and then more of a coin flip 3 days after New Year's Day. So it's not necessarily looking the fantastic, let's say 2 days after. What about the Russell though? We've been talking a lot about this on the channel and whether the Russell 2000 can hold up for a fantastic January and possibly a decent Feb. These are some of the stats that tend to come through. And you can see here the odds of, let's say, December and January updates for the Russell are pretty strong. Where do we tend to see weakness? We tend to see weakness right near the end. And this is kind of where you get that kind of profit taking that happens for tax reasons around the calendar end of year. So people that are worried about what happened on the Russell through the last couple of sessions, a lot of it will come down to price action. But of course, realistically, it's pretty common for it to find weakness around this point. And then it's common to actually see quite a lot of strength through the first middle part of the January kind of rally. And you can see that on that result right there. What about the sentiment results? Well, they're in again, but less bulls than there were the weeks before. Bears started to increase as we started to find some chop in the markets. And it's unlikely this chop is necessarily the end of markets based on some of our options analysis. It could be that we're pinned to around the 4,800 to 4,900 zone for a little bit longer, but we will be updating on this channel as we get more options information coming through the next couple of weeks. Options is going to be a big component of what's happening in 24, specifically the 0 DTE. So we'll be looking at those quite a lot. What about chart inflows for 2023? Well, no surprises. There were big inflows into, of course, equities, and we saw one of the stronger years in terms of increases, big movements into just generally equities across the board. So are we out of some kind of bear bust? Well, a lot of stats say that 2024 could be really good. Let's go through the good side, then we'll go through the bad side a little bit later on. Of course, the good side, we've only got 3 reads on it, but what it shows you here is that when we saw momentum cycle from really a negative reading up until a positive reading, you can see here the negative readings from down in these lows, we tended to start new bull cycles. Now, we don't have too many results. We've got 1, 2, 3 results, but you can see that in each time they've been positive, they've tended to run for quite a long period of time, and the pullbacks have been met by bull demand. It's something to keep in the back of your mind when you're looking at these markets. Another bout of internal momentum. This is the 4th time since 1950 that we've seen this type of thing occur. And the only other precedents in terms of bullish strength like this were 1970, 1974, and then of course the early 2010s. Now in all cases, what happened was the market at least rallied a little bit more past that point, but you'll notice that there was actually some fairly significant pullbacks during the 70s. Now, funnily enough, the 70s is where a lot of people have been focused on due to the nature of the sticky inflation that we saw back then. Will we have it again? This is something that's keep in the back of your mind. A rally into maybe buy the rumor, sell the fact could be the story of 24. A 20% year is in the books for the S&P, but what does that mean for 2024? Well, generally, it doesn't mean that we have a bigger year, but it does mean that 80% of the time we're in positive territory. And I think that would make sense. You know, we've never seen a recession actually in an election year, funnily enough. And we've got a stat on that a little bit later on so you can see it. Some other things here, S&P 500 composite in election years. And then, of course, in election years when the previous year was over a 10% gain. And you'll notice that results tend to be a little bit better. So the bulls are going to like this, but notice where the weakness is. February, March, April. So if we're going to see weakness, we usually see a bit of strength in Jan, then we start to get shaky in Feb, and we get shaky into the April period. Could that be the opportunity that some of us are looking for out there to get back into stocks at, let's say, slightly more fair prices? I don't think they're going to necessarily get that cheap. It could be, but just remember there is rotation across the board. Now, a lot of people are sending me messages about the Grinch, and of course, this is something that Wayne managed to produce, and it's a great study. Unfortunately, this year we didn't get the Grinch. Why did we want the Grinch? Well, if we had a negative session on the Grinch, and you can read it here on the chart, basically we had incredible strength in January, and the stats were very, very, very positive. We usually saw 16 positive to 3 negative. We had a 4.3% average January period, and we ended up getting no Grinch this year. It came in at plus 0.31%, and that means that we didn't get that set up. Now, I think it was like 70-something% of the time we would usually receive positive markets, so it's not unusual to do this around this time of year, but what it does mean is we still are in the outlook of possible double-digit losses as well in 24. What I like to think of it as, though, it's a shame that we missed the Grinch, because if those 4 days had come in negative, we may have had an exceptional January, and it was at least looking pretty good. Some people are floating around this particular chart here, the NAAIM number starting to get pretty high. We'll talk about that more in an upcoming video, but that's starting to get back up there, so something we should be looking at. And then, of course, we know that we just closed in 8 weeks straight up, then we've kind of got a flat week to slightly down now into the end of 2023. And this is really what you expect. Generally, after 8 weeks up, remember the stats showed that 1 week return was kind of sideways. Funnily enough, that's where we're at. 2 week return was kind of sideways. That would be the first week of 2024. And then 3, 4, 5 weeks on 6 weeks, etc., we tended to be more positive. So could that mean that rallies are going to come through for January? Well, it does tend to suggest that. Some other election year kind of seasonalities, you can see here another different chart, a little bit different data. You see that weakness that starts to come through in February into March and April. That could be the story here. Certainly it's different usually to other years. Now notice that other years tend to be rallies during that period, not in election years. So keep a lookout for weakness. Of course, that's what we'll be doing here on the channel together. As I mentioned before, the percentage of recessions in presidential cycle years tend to be actually zero. And this is all the way back from 1929. So yeah, we tend not to actually go into recessions, even though a lot of people would think of it. Could we remain at an elevated inverted yield like we did in the 70s for a really long period of time? Now, if that's true, remember when yields uninvert, that's when you need to be terrified. We've got the chart coming up later on today's video, so we can talk about that together. What about Tesla? Dark pool activity in general, did we see any? Yes, we have had that big Tesla trade. That's now underwater. Now, the Tesla stock market trade for the end of the week turned out to be quite negative, and it went super bad coming into the end of the year. So we'll talk about that later on. But there was that large trade that came through. Was it a sell? Was it a buy? We'll soon find out, I think, with price action. Some other big ones here. Vanguard large cap ETF getting a huge transaction coming into the end of the year. It is kind of at a resistance level, so I guess you could take it as maybe a sell. It's probably some profit taking or harvesting coming into the end of the year as well. Russell also getting a massive trade on it near the end of the year. 16th, one of the bigger reads that we've seen in quite some time. Was it profit taking? I would say it was probably a little bit of that. And as we see, this is kind of the time of year you do tend to get it. Now, Apple is one of the most interesting stocks because it's had so many large trades up here. As a technical analyst, you might look at this and say, this looks like supply, and this could be distribution for a sell. It's certainly one of the most worrying signs in the markets right now, and it's something that I would be looking at quite closely. In fact, pricing out, and we'll look at Apple in subsequent videos where we'll talk about the levels that you need to be watching. Because if Apple breaks below, remember, this can be kind of like the canary. If Apple starts to break weak, then the rest of the market is usually about to follow. And sometimes this can also lead you out of bad periods in time as well. So Apple is one to watch in 24, and there's plenty of large transactions going on in it. Now, if the market holds these current key levels and then starts to rally up, there could be a lot more in this rally. So we'll talk about that later on as well. Now, what about the trends? What's been going on in terms of rotation? Firstly, defensive, defensive, defensive. The first time we've seen this. The 5-day rolling average now has one of our favorites recently, which is biotech, doing really good, but also staples, healthcare, and utilities for the first time in a long time have been the leaders. Now, this is the same that we saw on the Friday close. As you can see here, we ended up getting a pretty nice rally through, or at least a hold through the defensives. If this continues and we end up breaking some key levels that we'll talk about in the S&P 500 later on, it could show you that that pullback's coming. And that is something that we usually tend to see Wall Street do. Hold into defensives, take some profit, and then, of course, dump it through key levels. If it happens, we'll be there and we'll be talking about it. Let's go over to options. Any large option activity? Not really. You'll notice here the S&P 500 is fairly even. Still more puts than calls, which is pretty normal. The Q's got a lot more puts than calls, but they weren't really elevated volumes. This is why we make a little bit less videos over this period of time. We don't tend to get as good a reads from the data, and you can see here, that's what it's suggesting. Basically, options across the board, a little bit weaker coming into the end of the year. You can see some big moves though. Things like Mara got absolutely smashed. Capitulation coming in big time to these crypto kind of companies, and negative 16.4% at 4.58. And everybody trying to jump in on the calls. I'm not so sure about that. Looks like a capitulation style trade to me, to the negative side. Let's get into the charts. First up, I want to talk about central bank liquidity. We've seen a huge dump off in central bank support for markets, and this is something that we do tend to follow. That is certainly worrying. Now, of course, has the stock market moved at all from this? No, it really hasn't. It's barely fallen off. The Russell's the only one that's fallen off a little bit. But if this becomes a continuous trend and we keep seeing this drop off, it's something that we've talked about before that can be a lead for markets. Price action is going to be number one, but this is certainly a worrying sign. And remember, we have not seen any worrying signs this entire rally up until around this area here. So this is when we've started to see that weakness come back through. We'll be following that one. Central bank liquidity down across the board. Kind of common to happen around this time of year, so it's not unusual. but this is actually what started that 2022 fall off. You could see that central bank liquidity got sucked out, the market went through key levels, and then of course it started to just like get demolished. So something to keep on the lookout for. Another one that we're watching is of course the potential rally here in US 10Y. I think that US 10Y has hit a very critical support, and a lot of you have agreed with me in the comments when we talked about the idea that it's fallen off really quickly. It's been the obvious trade, everyone's loved it, and then we've come into this key level of demand. So we saw a little bit of a weekly pickup here in 2-year yields. If we go down to smaller time frames, you can see that we do have some structural kind of lower lows and lower highs still, and we haven't been able to break out of any key levels. Some zones to watch this week, 3.9%. From there, we might go up to around 3.97%, but I'd be still cautious until we're above 3.97, which is up here where we've got our alert. We can't really say that yields are turning towards the upside. At the moment, it's still in a downtrend, but we're in that key pivotal area where I could see people start to buy up yields as they've been quite weak recently. Let's move over to yield in terms of inversion. Now, this is what we mentioned before. At the moment, we're still inverted. That means that the short date yields are above the long date yields. Now, as long as this remains the way it is, I wouldn't be worried about a significant pullback due to weakness in the economy. Remember, if the Federal Reserve is cutting rates, why are they doing it? Not out of the goodness of their heart, it's because they broke something and the system needs their support. In this case, we don't have an inversion of yield, which is when it goes below 1. So this is certainly a chart to be watching for 2024 ahead. Let's move over to Treasuries. Of course, Treasuries actually showing an island reversal again. Now, we've already had one island reversal. It didn't work right here. And this, of course, was in that level of supply. Now we're at a zone where we've seen tons of transactions, and I mean a lot of them. It's not just been one transaction up here, quite a few. Island reversal towards the negative side kind of suggests that maybe yields have found a demand and that treasuries might be actually moving down. Remember, this was a huge squeeze on so many people that were trying to go short on treasuries. We saw Ackman switch down here. We obviously became more bullish down here. We've been cautious around this area because I still think there's probably going to be like this later on. But do remember that yields tend to, or at least markets tend to do pretty well from a treasury perspective if we are going into a shaky year. So we're not negative on the medium to long term for treasuries. We're just negative a little bit here on the short term, which, can be hard because treasuries are not really a great short-term trade generally in most years. What about home builders? They're continuing to eke out slightly higher highs. No new lower low for home builders yet. It's been a very strong market, and it's shown us that markets are continuing to kind of show us strength underneath the line. We've also got transportations that are still strong. Now, if they break underneath things like 15,716, which would be a new low, that's something that we can set an alert for. And we'll do it right now. We'll put an alert there because that could be a double top and obviously a weakness in transportations and maybe a weakness in home builders plus the federal support. Looks like the central banks are kind of tapping that market. That could all be quite negative towards the market overall. So these are the kind of precursors that we look for before the market falls off. We haven't seen them yet, but they're starting to be weaker than they were, let's say, a month ago or 2 months ago. Copper, another one that fails and fails and fails again to get above this bloody 4 level and this 3.95. Again, I've got an alert here. The weekly looks absolutely terrible. Another shooting star weekly. But do remember, if we get above this zone, this is why we have an alert up here, and we go especially through like 3.98, that's going to be super strong for markets moving forward. And it's something that we're looking for into the Chinese New Year if we are to see support in the Chinese market. And speaking of the Chinese market, it's something that we haven't brought up too much, but I do like what I see here. Now, I know a few of you will say, Tom, you've liked it for a few months. What the hell are you talking about? It's been crap, man. Yeah, it's been sideways, all right? But from a technical standpoint, there are some bullish signs. We just got an almost engulfed candle here from the CQQQ. You can also see the island reversal off the low. Again, not the best read in the world, but I think there's some strength coming in here. We've talked about a stat that goes back probably about 4 or 5 videos ago, maybe in the middle of the video, where we saw that, I think it was maybe Morgan Stanley or one of those places, they basically downgraded China again. Now, every single other time they downgraded China and they downgraded Hong Kong, the subsequent year was actually bullish. And that's the funny thing about these downgrades. Oh, we downgrade it, then the year's good. So this is an interesting kind of thing. What do you think about the Chinese stocks? Are they making a turn? I don't mean Baba. I don't like Baba as a stock. But what do you think about these indices? Are they starting to look a little bit better? Let's move over to another one that usually would come with China, which would, of course, be the commodities market, which is doing pretty poorly. So this is right down that weakness. The close of the weekly is terrible. But what we can do is we're going to set an alert above here. And this is just in case. Remember, you come from that abundance mindset, patience, react, don't predict. We don't know what's going on here. We know it's an important level. But if we think about it, if markets get above this zone up here and they start to break high, that will be a very pivotal point for market strength in 2024 as well, to show that commodities are not maybe flailing as much as they are right now. Something to watch, 2260 DBC, one we're watching very, very closely for. Now, this is the one that we also were watching last week, which was the dollar index, and it came down to our important line and actually found some buyers. So yeah, the dollar has been getting destroyed recently, absolutely flogged. And we kind of knew this was going to happen. It was based on yields dropping off. We also saw things like the Australian dollar finding incredible support. If you remember back about a month ago, we were loving that very much. It was a great setup, it's doing okay. And we have weakness on the US dollar in general. Now, the problem is we really have very little structure here to show us incredible strength. So it's going to be one we have to keep watching. I think this is an area where we could see demand come in. It works with yields. And of course, it all makes sense. Yields go up, dollar might go up as well. Treasuries might come down, market might stay sideways or even fall off a little bit. Something we're watching. US dollar at an important level. No structure yet. We'll update you through the week. Now, US oil, this one certainly looks a lot more negative. We thought it might be able to get to 76.90-ish or 76.50. It just got to 76.20 and sold off. Obviously, we have our heavily traded zone and a watch reaction zone for it. Sometimes it doesn't quite get to the levels that you want, and you can see here that it's now weakened substantially. So we've got a series of higher highs and higher lows. We've now made a lower low, which kind of makes me think that if we do get a pullback now in oil price, something like $74 is going to be an important read, and this could be where sellers come back in. We've got to remember we are in an overall downtrend. A lot of futures leverage is saying that we are trying to go long. So as in a lot of futures retail guys are trying to go long here. I would think that 74 is something we might see printed over the next week. And if we do, that could be where weakness comes in. So something for day traders, something to watch. And of course, maybe then you can make your own calls on those types of things. Let's talk about gold. What's going on here? Pretty big weakness actually. So we thought that 2070 to 75 would be where we see gold weakness. It ended up going to $2,088 an ounce, then found quite a large sell-off. The dollar index finding strength, yields obviously increasing, not great for gold. So both of those things have followed it. I would say that a new low underneath the previous weekly low could be an interesting alert that we'll set. So that's a zone that we're going to be watching. And if you take a look at the higher time frames, you can kind of see what I mean. I mean lower time frames in this case. So we've had kind of like a big switch here. We've got some trend weakness now on some of the time frames. And I think if we get through something like 2050, we could be going into a little bit more of a sell-off on gold. We expected that gold would be strong in 24 in terms of what we saw. Then we had that huge rally into big bust, and now we're in kind of sideways style market for it. January does tend to do pretty well for gold, but at this point, I would say that the trend on the small time frames is finding weakness. Let's move over to Tesla. Pretty big disappointment here in terms of the way it closed. Bad weekly close, like not good at all. Long leg doji into no bullish breakout. Now, if that had held above $260, it would have been a super bull call and things would have looked a lot better. But because we got that rejection, because we broke up and above, we know that this was the most heavily traded zone. So right around 260 is an incredibly heavily traded zone of Tesla. And it looks like there could be sellers around here. So if we do make a new low under that doji, it kind of suggests that we're changing trend towards the downside now rather than the bullish side. It's really touch and go. So it's going to be a very important, let's say, next couple of trading days for Tesla. We'll update as we see it. At the moment, yeah, I mean, you'd have to say it's negative if we start to get that kind of flow through. For swing traders, you're not really going to see anything until you get below 228. But for day traders, you're going to have to really hope that this level of demand holds because that's a very important zone for it. If it does end up going above last week's high though, get ready for a squeeze. There will be so many shorts that'll be trapped in that zone. Utilities, this is one that we've seen pick up in the last couple of days of trade, and you can see what's been happening, a little bit of rotation back into it. Utilities doesn't look fantastic on a chart or anything, but I just want to bring it up. You can see that these are quite far behind the other markets. So if you put on something like a daily or a weekly, you'll really get an appreciation of how bad some of these markets are performing versus the S&P 500, which is obviously close to new all-time highs. And there's a lot of opportunity out there in market sectors in 24. There's still plenty of ones that haven't rotated, and I expect them to show rotation if we keep seeing strength. Now let's move to the Russell 2000. Now this was a bad weekly close, no doubt. Set an alert above this zone, because if we do get above this zone, it's going to be a big deal. 2070, I think that's going to be a fair breakout, and we'll continue to see Russell strength. And you can see here that the US 2K found some weakness, but it really hasn't closed below anything that's substantial. Until it gets below 1974, we're not really going to be concerned about it from a swing perspective. You can see also the daily 20 moving average will be sitting there. Big demand will be sitting there. So if we do get a pullback like that, that's where I'd expect those bulls to come back in. It's not really a huge bear bust or anything. Now we mentioned that there's some charts to watch for 24. This is the one I'm watching. Russell versus the S&P 500. Why should we be watching this? Well, number one, it's a huge trend line. And I don't usually use trend lines if you've been watching this channel, but that's a trend line I'll be watching. The other thing is we have a huge supply here, which suggests that this could be where the Russell starts to weaken. Now, that's certainly true. It's certainly a level where we might see that weakness. But if we get through this 0.43 ratio, and this is what we call a long-short kind of ratio, then that will be a substantial, you would think, money flow back into the Russell. The Russell was super oversold. Now it's become, of course, a little bit overbought, you would think, in some ways. And I still think there's a lot more movement for it. But take a look at this ratio. If this ratio breaks above, it could be a great January and something we'll be watching very, very closely. One to watch on the charts, certainly for 24. Let's keep moving along now. Let's go through the NASDAQ. Weakness was there, but not enough weakness. If we take a look at the 2 hour, it really hasn't gone under any of the main substantial kind of buy zones yet. So that's going to be a bit of a tough read. The NASDAQ has gone to new all-time highs. Yes, it's rejected down the wick. That doesn't necessarily mean that it's all over for it though. As we know, the first day of the new year tends to be okay. Then it goes a bit sideways as profit taking and rebuying and all sorts of things on Wall Street side happen. But yeah, a little bit of a rejection week on the close. Let's look at the main market being the S&P 500, and it closed right on resistance. I would say this is pretty much resistance, resistance, resistance still. It's where we expect if we're going to get some type of short structure for it to happen. You can see here on the futures, the way that it's kind of put there. Now, this watch reaction here level was a level that we set way before the market came up to this point. So, of course, this is where we expected the market to react to. It did initially, showing that flash dump. It then rallied to a new high. You don't really need to be worried too much unless it gets underneath this level down here. So, at this stage, the market's still bullish. 4,700, 4,695, the most important level to be watching over the next coming weeks. We're about 70 points off that. And options at this stage suggest that we should be able to hold this range and that markets are still kind of driving towards the bull side. But of course, we do have those warning signs, the things like the Fed liquidity. Let's see how that plays out. We've got Dow Jones Transportations. Let's see how that plays out. We're putting together more weakness than we've seen in 2 months on this market. So yeah, we're watching, we're cautious, but as we always say, patience, react, don't predict. At this point, the market is still bullish, and that's just how it is. Let's move over to Bitcoin. Now, Bitcoin has been slow. It's been really slow, and it's holding a zone. Now, some of you might say, well, Tom, look, it's a double top. Look at this. Look at these tops. Look at this. It's going to sell. I tell you, it's going to sell. Well, do you know that? Do you know it's a double top really? Do you have the right information? You're going to see a lot of divergences on indicators around here. At this point, it's still managing to hold, I would say, the 20. You can see that this is still a doji. This is a doji. If we break to the upside, I still think that we could go to 46 to 48 for, of course, Bitcoin. And if we do end up failing on this 20, which you can see here, it's held quite a few times, then we break below this level, then we can say, okay, double top, further weakness coming in, and then we can talk about our cycling period for 24. Because remember, 24 is also a halving cycle, a very important time for markets indeed. In terms of week ahead, in terms of news, let's have a look together. We'll load this up together right now. You can see we have, of course, some bank holidays across the world, thanks to the new year. Then we go into a little bit of information, including ISM manufacturing, JOLTS job openings, the FOMC meeting minutes. So we kick off the year with some meeting minutes straight away. And then we keep going down to the big jobs number, which is coming through, which of course is non-farm payrolls. Now, non-farm payrolls will move yields quite a lot this year, and expect the US dollar to move heavily off it as well. The reason? Because this is a central bank policy year, and these years tend to be excellent for currency trading as well. So I expect us to be talking a bit about commodities, a bit about currencies, and that's what makes our channel so unique, because we talk about all the markets together, which I think a lot of you enjoy. Thanks so much for making this year fantastic. I want to wish all of you and your families a wonderful 2024. And of course, cheers to each and every one of you out there. I hope you had a great year. I think we did a pretty good job, especially in that second half. Catch you for now. See you in the next one.